All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. All right, so today is going to be a little bit different. It may even get a little bit controversial for some of you guys. We're going to be talking about the true price of gold and silver. Now, I have a feeling that my opinion may be a little bit different than some of you guys, so let me just begin to set the stage and just hear me out. Let's try to be respectful of each other's opinions, and let's get started. So these are the current spot prices for gold and silver. Gold's on the left at 1870.82, silver's on the right at 24.16. Now watch what I'm going to do here. This is the current spot price for a share in Amazon stock, $3,099.40. Now, did you get that? Did you catch that? Well, turns out, believe it or not, spot is the technical term that can be used for any asset that's exchanged in a market. Also factoring in things like supply and demand. Now, I know some of you have mentioned that you can find the true price of gold or silver on websites, auction websites, such as eBay. However, I would argue that though those coins sell in those auctions, the largest sum of buyers and sellers, and this is the key, the largest sum of buyers and sellers have currently settled on these prices here. Now, you see, the markets are actually auctions as well. Now, the prices constantly shift. As you can see here, take a look at this intraday chart from November 20th. The prices are constantly shifting given supply-demand dynamics. Now, we'll talk about these things very towards the end of the video here, these very sharp lines. But in general, prices change given the supply and demand dynamics. On auction websites or eBay, they may reflect a similar dynamic, but it's actually a little bit different. And we'll talk about that soon. But first, of course, you can list gold on the website for $10,000, $15,000 right now. But then you would have to ask yourself, how many people, what volume would you get of buyers for that gold ounce right now at $10,000? You know, if you sold it at, let's say, $1,800 flat, you would get a lot of buyers, but you would lose in fiat terms. You as a seller would lose, depending on when you bought your gold or silver. So you would adjust your price to whatever gives you the best return while giving you the most buyer volume. You know, that would actually require you to buy it at, or would have required you to buy the gold or silver ounce at a previous point at a lower price as well. So going back to price discovery, you know, and eBay, what about the bid feature on eBay? Well, the funny thing about the bid feature is that it actually kind of skews towards the seller. You see, the price discovery isn't actually occurring in the classical sense of price discovery. You're actually engaging in this, or the seller is actually taking advantage of this, the greater fool theory, which is the idea that out there that there will always be a bid for your whatever it is that you're selling. Even if the volume is extremely low, you will still get a bid, and that bid will still count on eBay, and that person will have to pay up because they bid on it. Now, for example, an easy way to think about this is, yes, someone does bid on something, but how many people are actually bidding at that moment? You have to ask yourself, well, go to an auction, and what does an auctioneer say? Going once, going twice, sold. And there's a reason why during those moments, most of the time, there aren't a bunch of people just flocking to throw themselves at buying whatever that product is. It's because the price has been bid up so much to a certain point that only one person is left in the volume of buyers who was willing to pay a higher amount than the rest of the buyers in that room. You see, there's actually and this is almost the beautiful thing about, economics and just general supply and demand. There's actually a large volume of people who are willing to pay for it at a given price. But the more you kind of get away from that mean, the more you're on the tail end of that curve, and you're going to get a lot of people who are going to be, or fewer people who are going to be buying. And then you can go on the opposite end of the curve. There are going to be fewer people who are going to be selling at a given price. So what you'll find is the sellers and the buyers will meet in equilibrium in the center. Now let's go back to the prices here. So what exactly is then the fair value of gold? Well, you would actually have to present a given, time duration. But let's just choose one here. We'll actually start here, which is September 23rd, and then we'll go over to, let's just say here and say November 4th. So what you'll find is that there's a general support level where most sellers began to get overtaken by buyers, and a level of resistance right up here where most buyers began to get overtaken by sellers. Now, the fair value would actually be somewhere in between, where you would actually find equilibrium, or this price discovery taking place. Equilibrium between buyers and sellers. Now, in this date range, that would be somewhere between the high 1890s and also the low 1900s. So you could say like maybe 1897 or something to about, let's say, 1909 or 1910 or whatever. During this time range, that was, probably fair value of what gold was at that particular time. Now, you can obviously get a more accurate read on this is if you had, proper volume and a volume indicator here to also show you, okay, where is all of the volume kind of settling, and around what price is that volume settling, to kind of help you out a little bit more. But the old adage pretty much remains true, buy low, sell high, and, suffice it to say, if you were looking to buy gold or silver, and looking to sell it, pretty quickly, what you will want to do is actually look for the price to edge down a bit to this level of support here, and sell it when it gets close to this level of resistance. Or you could play it safe and try to sell it whenever it gets to fair value. But what you would have to do is get an accurate read of the buying volume and selling volume to the point where you're starting to see sellers, like this red candlestick here, overtake the buyers. So then you would get ready to get in at a lower price, knowing that it will eventually revert back to the mean here, which is the fair value, where you can then sell it. And that's just one way to kind of look at it. So let's go back to this. So guys, spot price tracks, this phenomenon here of price discovery, reacting to supply and demand dynamics. So yes, I do think that spot price is an accurate read on this phenomenon. And of course, you can argue, well, who set the initial price to set, a spot in motion on its current course? But that would quickly actually become irrelevant, because spot price changes at the moment supply, the spot price changes given the at the moment supply demand dynamic at that particular moment. So all that to say, spot is an accurate read on current supply and demand dynamics. Now, yes, you can say, well, what about, and we can go back to this chart here, what about these large red candlesticks that just happen out of nowhere? And what about, these large spikes here that just happen out of nowhere? Well, what happens immediately after? Do you see what happens? It actually starts to trail back down. You see, it doesn't just stay there and just stay there forever. It actually just comes back down, because at the end of the day, you can't mess with supply and demand. Not many people are willing to continue buying up here. Even other hedge funds aren't willing to continue or willing to put their money in to buy up here. They're waiting for that price to come down. So what does that mean? That means it's going to come back down and revert back to a mean. So yes, these spikes can happen in the short term right here, and it can even happen to the downside, going from a high price to a low price. But at the end of the day, it's going to revert back to the mean because of supply and demand dynamic. But guys, let me know what you think about all of this in the comment section below. I'm curious to see what people think about this. I know this is probably gonna get a lot of, maybe some hate comments, I don't know. But I wouldn't be honest and forthright if I didn't give you my, my current read on things. So thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.